This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today is 5/3/23, show 488. So, Nick, it's Fed Day.
It is Fed Day, and it's a big one, Kerry. This is a highly anticipated meeting. The FOMC will make their interest rate policy decision for the U.S. at 2 p.m. this afternoon. They're expected to raise rates by 25 basis points. While I believe that's already baked into the cake, the verbiage going forward is really going to be what's important. Are they going to talk about a pause? Are they going to talk about potentially cutting? Everybody's waiting to hear it. The current Fed funds rate is around 4.75%. This hike should take us to around that psychological 5% level. The central bank has wiggle room here because a 2-year Treasury note yield is at around 4%. So they have some room to play with. But I think they know that they have to keep raising. And there's just a lot of inflationary pressures out there. So we'll see what they have to, what they're going to do here. But it's going to be very interesting and a highly anticipated meeting at that.
Yeah, well, obviously they're going to do the 25 basis points because it's baked in the cake already. And, well, it would be perhaps for the markets a bullish signal. It's a free rate hike. So they'll do it, obviously, right?
Right. I agree 100% with that. A lot of people are almost begging the Fed to not raise rates, but they have to do it because if you look at what's going on out there, you got a war in Russia and Ukraine that has no end in sight. You have more NATO involvement. War is inflationary. Then if you get a China-Taiwan conflict, which nobody seems to be talking about, but that's very much alive, that will be inflationary. You get any kind of supply disruptions, that's inflationary. We already have inflation in food prices. I just went to Costco. I couldn't believe the price of my bill. Then you have gasoline going up again. And just think about the money that's been printed since 2020 when the COVID deal hit us. That's roughly $13-14 trillion. That money just doesn't disappear. That's inflationary. So, the Fed, I think, wants to get ahead of this thing a little bit. And, they have no choice, in my opinion. But a lot of people are almost begging for them to stop it because of the banking crisis. But, the banking crisis has been here already. So, it's going to be interesting to hear what they have to say. And that could move markets. With Jay Powell's words are definitely market moving words.
Okay, well, yeah, it's either way, the market's going to have an intense day, it seems like.
It is. It's going to be quite something, and I can't wait. It's going to be right at 2 o'clock, be followed by a 2:30 press conference. That press conference will be pretty interesting as well. Normally gets a lot of softball layup questions, but today they have to ask him some real things. We've had 3 bank failures in the last couple of weeks.
Yeah, and it looks like there could be 2 more on the way. So the regional bank ETF is bouncing back a little bit today.
Yeah, so today that's up about 2%, but it got absolutely walloped yesterday. I mean, this thing broke down from a bearish consolidation pattern, which on this program we've been warning traders about. We've been warning them, saying, hey, this is making really a bearish pattern on the daily chart for another leg lower. And yesterday it took that leg down. And again, today it's bouncing back up by about 2%, but this doesn't look finished to me.
Yeah, supposedly there's 2 more banks, PacWest, I don't remember the other, that are on the rocks now. And at least the Treasury and the Fed and the FDIC have hit their stride, and now they'll just close them out on the weekend. And welcome to too big to fail National Bank. That will be your new bank if you were a depositor there, and things will move on, and the market will forget about it, they hope. But if it doesn't, we could see some real turmoil.
Yeah, I think we should name it Too Small to Fail 2.0, because this is just, again, more bailouts. And, they say it's not going to cost the taxpayer anything. But when you do business with a smaller bank, maybe you don't get you don't have that safety net over you. But one thing you do have is you get a better deal than when you're dealing with a big bank. So, if everybody goes to JP Morgan, it becomes the bank of choice. What do they give you for a savings account? What are their money market rates? It's pretty incredible, but the customer loses again. The consumer loses once again.
Yeah, that's the American way, Nick.
Unfortunately, it is.
Hey, so gold had a huge move yesterday. It was up over 1%, 1.3%, I think.
Yeah.
Pulls back a little bit today.
Rocket ship ride yesterday for gold. I mean, gold is the ultimate fear play now. It's the new VIX. And today, what is it doing? It's basically flat. It's down 0.05%. So, basically taking a breather here. And that just tells me that this banking crisis is not over, because you could see gold. It went parabolic on fear since March 13th, and it never really pulled back much. It just, pulled in a little bit from an overbought condition, but it went sideways. And when you see that sideways pattern, that it's telling you the banking scenario is not over. That banking crisis is still alive and well. And gold is holding up very, very well. I would not, get in front of gold. I don't love gold up here, Kerry. I don't like to buy anything on the high side, but it's still telling us that, this banking crisis is not over.
And when you're seeing declines in gold, they're very small. And generally, you're seeing gold not close on its low for the day, which is generally bullish, right?
That's right. And it's a great point, because that seems to be what gold does very, very often. Even on days where it's getting hammered, by the end of the session, it's off the lows by quite a significant amount. And, when I've seen that, I've told my members, I said, there's no play on this regional bank stuff. There's no play. Just leave them alone. There's going to be more of these companies going by the wayside here. And that's kind of exactly what has happened.
Well, in fairness, for the past, I guess, since the S&L crisis, so we're looking close to 40 years, consolidation in the financial sector. And that was, I guess we're going to see more takeovers at this point, whether they're forced or voluntary, because the smaller banks will just be throwing up their hands saying, we can't do this anymore, and they're going to be looking for an exit.
Yeah, I believe you're absolutely right. And, you could go back all the way to the, 86, 87, when the S&L crisis occurred. And you could see that, back then, I could only imagine we probably had close to 100,000 banks in the country. Now we're probably down to 4,000 or 5,000.
Yeah, and that trend goes inexorably forward. So oil is getting slammed today as well.
Yeah, oil's getting slammed. I mean, this on April 12th, crude was trading around $83 a barrel. Today it's trading at $69 a barrel. This is a daily chart. It's at daily chart support right now at around this area. But if it takes out the March low, which is around $64.12, it will likely trigger decline down to $50. I know I mentioned that $50 level for crude a while ago on here. And then OPEC Plus came out right afterwards, and crude soared higher. But I got to tell you, I really think we're going to see crude get down to 50 in due time. But that will be what I call a golden goose buying opportunity. So keep crude on your radar. It's got a long way to go. It's only at $69 today, but it gets down to that $50 level in the next couple of months. It is going to be, one of the best buying opportunities I've seen in the market, kind of like a silver buying opportunity in September.
All right, so we should just talk briefly about Henry Hub, then nat gas. That's right now it's trading around 221. So it's going to be the same type of buying opportunity for Henry Hub. Is that here yet?
I think it's here. I think the nat gas buying opportunity is here. The pattern on nat gas is different than the pattern on crude oil. So crude oil obviously has been pulling back. When it gets down to $50, that's the spot. When you look at nat gas, though, that's been floundering here around this $2 and change level for about 4 months. What it's doing, in my opinion, is nat gas is this is accumulation. And this is a big monthly chart, bullish monthly chart pattern, believe it or not, because the lows in nat gas were made in August of 2020. And then we had, and those lows, by the way, were around $1.43. So we put that low in, and then we went all the way up to $10. That $10 high was made in August, notice the month, of 2022. Now we came down and we made a new low, or a low in, not a new low, but a low in crude at around 196 to 194. And I think that's the low. I honestly think that's the low. I love nat gas right now. It's one of my favorite trades. It's just not going to be an instant gratification play. I have made money on it on a few occasions getting in and out, but longer term, I think this is the setup to go a lot higher. And I ultimately believe, and this may sound crazy, but nat gas is going to make new highs above that $10 level in the next couple of years. And you're going to see commodities in general do that. I know people think it can't happen or it won't happen, but it's going to happen. This is just in Elliott wave terms. This is just a big leg 2 down on a monthly chart. So leg 1 was from basically June or August of 2020 all the way up to 2022, the August top. This is a leg 2 down. And, leg 3s are the biggest ones, the biggest legs when they get going. And I think we're in the start of that.
Well, tumultuous times for sure. And you got to wonder, how long this keeps going, huh?
Yeah, but there's a war, so to speak, on nat gas right now. I saw in New York, they're going to be the first state to ban natural gas stoves or gas stoves. So, you look at some of this stuff and you wonder why, these commodities are trading so wacky lately. But, these people are just, they've lost their minds, so to speak. And we're living in a chaotic upside down world anyway.
All right. Well, that is for sure. Well, that's it for today. We will be back on Friday. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. And of course, your emails are welcome, KL@kerrylutz.com, and write your comments down on the YouTube channel. We'll get to some of them hopefully on Friday. Nick, we'll talk to you on Friday.
Sounds good, Kerry.